Well, 2023 was a lackluster year for global startup funding, falling to its lowest level in 5 years, according to a new report from Crunchbase. But how much of this falls on the regional banking crisis, or are other factors spooking investors? To break down the numbers, Gené, Teare, Crunchbase News senior data editor, is here. Thank you so much for joining us this morning. It's tough because it feels as if there was this very high bar in 2021 for this sort of funding. So put this in context as to how 2023 went and the expectations for 2024.
Sure. So, Rachelle, great to be here. So I think it's no surprise that venture was down in 2023. And this is the first year where the whole year was down. It was around 285 billion, a 40% decline year over year. And if you look at the market peak in 2021 was around 600 billion. 2022, earlier on in the year, Q1 was still strong. Q2 venture started coming down. That was north of 400 billion. And this, as you said, is the lowest we've seen in the last 5 years. So a very slow year for the venture equity funding environment.
And Gené, which aspects have really seen the greatest inflows in terms of venture capital, and which ones have you seen the biggest pullback on?
Yeah, so we've seen the biggest pullback in, across the board, most sectors were down. What was interesting to us is that financial services is a huge sector. There's a lot of interest in financial services and digital payments, and that was down 50% year over year. And then we saw a lot of consumer also down. So we saw e-commerce was down significantly, I think over 60%. We also saw media entertainment down significantly. So a lot of the consumer sectors, but most sectors were down, including Web3, I think was down the most. This is cryptocurrency and blockchain. That was down more than 73%. So a real fall off in Web3 funding.
And of course, we've been talking about AI for the better part of more than last year. But as you look at the sort of spending, how are companies really viewing this? What are they looking for when they're trying to put some investments to work on something, especially generative AI, still very early days for this technology?
Yes. And so I think AI was the one bright spark. I think it is the sector which has sort of excited the whole venture industry. That is an industry that generative AI is going to play out over the next 2 to 5 to 10 years in venture. And so I think this was the one area of excitement in the industry. And we did see that industry go up, where it was around last year, it was around 46 billion went into AI. This year it was 50 billion. So not a massive increase, but an increase nonetheless, and it is an indication of the excitement. And we've seen a lot of those dollars go into those foundation model companies. Around 18 billion went into the top 3, including, OpenAI, Anthropic, and Inflection AI. We saw a lot of dollars go into machine learning operations. So it's sort of managing your AI workflows. There was a lot of money there. And then there's a lot of interest in how that plays out on the application level for consumers, where consumers get the benefits. So we looked at, Figma, Adobe. There are lots and lots of consumer plays in AI, and those tend to be incumbent companies who are adding AI into their stack to provide productivity or better solutions for their business and consumer users.
So, Gené, when you look at the sentiment then, especially being led by AI, what does that mean for the broader market?
I think what it means is, what's driving this sort of downturn in venture is really the lack of liquidity for the venture markets. So when the public markets slowed down at the end of 2021, we saw a lot of tech stocks pummel at the end of 2021 and into 2022. And then very, very few venture-backed tech companies have gone public since the beginning of 2022. So we've had 2 years of a real slowdown, and that has really put the brakes on the venture community. As I said, it takes a little time. So the first 2 quarters of 2022 was still up. But since then, because we've had so little liquidity, we've seen the whole venture community step back. And I think what's been interesting, it's not just late stage, those companies who are going to be entering the public markets where the cutbacks happened. It cut back at late, then it cut back at early stage, and then it cut back at seed. So absolutely every single part of the ecosystem is impacted by the slowdown. It's trickled down to every stage.
And it's interesting, though, because on the flip side, also a general sentiment of bullishness that you note when it comes to IPO expectations for this year. So talk about what's driving that. What are the factors then that are driving this IPO optimism, especially given we haven't really seen the best performance coming off of last year?
Yes. So I think what was interesting is three companies went public in September. These were the strongest tech companies to go public. If you look out over the last two years, so there were Arm, which was SoftBank owned, so not venture backed. But then we had Klaviyo and we also had Instacart. And both Klaviyo and Instacart are down from their IPO price, so there is a little dampening. I think what I've heard in speaking to analysts is that there are companies who will continue to test the markets in 2024, but the expectation at this point is that 2025 is possibly going to be a bigger IPO year. So I think we will see companies go out in 2024. And if there is a bump in IPOs in 2024, that will definitely lift the venture markets. But it's still to be seen. We're not sure if there is going to be a big bump in 2024 yet.
And certainly a lot of people waiting to see what the Fed does in 2024 as well, sort of hedging their bets there as well. Appreciate you taking the time to join us on Yahoo Finance. Gené Teare, Crunchbase News Senior Data Editor. Thank you so much.
Thanks, Rachelle.